Okay, hello. So I thought I'd just make a quick video since gold has reached a significant point of interest. From the titles, as you can see, I have spotted a potential distribution that's been taking place over the past 2 months, which could have some serious downside potential. So before we start, I'll go over what a distribution is. It was a concept that was made to explain how banks and big players distribute their positions and begin to sell off assets. So as you can see, it starts off with what's called a preliminary supply, goes into a Bligh's climax. That's where the maximum amount of buyers exit the position, pushing the price down. Price automatically gets pushed back up. This is a secondary test of this supply zone here. Then we get a break of structure showing a sign of weakness, breaks back in to take out any buyers that were sitting on top of this high, traps them back, goes and forms a head and shoulders and falls to the downside. Another schematic would be the same as the previous one, but including a UTAD, which would again have the same impact as a UT on BC, but take out the highs from UT. So if I just go through what I've seen on the, as you can see from the daily chart, the momentum that caused this downwards push only took 20 days, whereas the retracement so far has taken 64 days. So that is already indicating that we are still bearish despite the upwards push. But I'll begin by marking on what I've seen. So before we start, I'll indicate why I've chosen. I'll start off by marking on the Wyckoff labels. So this would be my preliminary supply. I can't even say it properly. Automatic rally. I think, is it? Yeah. No, this would be the preliminary supply. Automatic rally after the BC, the buying climax. This would be the secondary test of this area here. Sign of weakness. This broke this automatic rally here, the PSY. Let me mark the lines on. Then got a ST here. So that's what it is so far, and now we've had our anticipated UT, which has taken out this BC here. The reason why I've chosen this as the preliminary supply and not this one is because by looking at volume, we can see that if we move the chart to the left, selling pressure actually started after this downwards push. That's when, as said previously, after the buying climax, that's when the first wave of real selling happens. Whereas for this, if this had been the buying climax, look at the volume, it's still averagely low. Whereas this one, massive red bar, indicating that this was where sellers actually stepped in. I'll turn this off. So that's all it is. I am expecting, so as you can see, we have had this this UT. Now there's either two scenarios that can play out as shown by the two different schematics. The one I'm leaning towards is this scenario. We get a bit of stalling for tomorrow, and then we begin to fall hard. We fall towards perhaps 1800 level, come back, retest these highs, to form a head and shoulders and begin to fall, and we could see some serious downside all the way to 1720 and potentially the triple bottom at 1780. The other scenario would be that, that we get a bit of stalling here, then we drop 1800, then instead of just forming head and shoulders, we come back, take out this high, then go to the downside. I could see that happening with the interest rate decision next week, but I'm leaning towards that being more bearish. In terms of points of interest for entering the trade, I'm mainly looking at this zone here. This area here between the 45 to 50 region. I remember the area I selected specifically was to take out this 4-hour candle here. So potential entries at 1847. If I get rid of the, let me get rid of the schematic for now and draw that on again. So what I do expect from price action perspective is something along the lines of this. So today we've had our massive engulfing candle to the upside. What I'm expecting is tomorrow for some type of doji candle, just a bit of stalling price action, and then for Friday for price to begin to collapse to the downside. So yes, 1847 was where I was looking for entries potentially, and then if we put our risk to reward tool, we could have a 20 pip stop potentially, and then swing it all the way down to 1720 minimum, giving us a, I'll widen the stops a bit just to be on the safe side. $1 to 40 risk to reward trade. That would give us a massive trade potential, which could, for most people, wouldn't be the percentage they even make in a year. So if this does play out, it has some serious potential, and it has a high probability. Again, our three confluences being the distribution that's taken place, the momentum, as you can see, from the high to the low. This doesn't really count as a low because it was what's the word, an exception. I forgot an anomaly to the thing or whatever. This took 16 days to form, the bearish downfall, and then it began its retracement to the upside. It's taken 60 days, 56 days. So that obviously indicates that we are definitely bullish for now. If I try to look for trend lines that could potentially be respected, I was looking at this one right here. Where is it? I can't remember where I see it. I drew it on before, but I've lost it. It was this one. Make that a bit more accurate. This was the trend line I was looking at. See 1 touch, 2 touch, 3 touch, and 3 touches as in this one and this one. This was more of a spike to the upside, and potentially a 4th touch. So I'm expecting Friday's price action to be strongly bearish. So yes, that's all I've got from gold. Let's see how it plays out. Hopefully we can get some nice moves.